What's up, my fellow investoraholics? Thanks for tuning into the channel, you guys. My name is Boris. I am your fellow finance junkie, you guys. We like to talk about finance, all facets of finance, you guys. We're talking about derivatives, equities. We're talking about real estate. We're talking about lending. We're talking about macro, microeconomics. We discuss it all, you guys. We are finance junkies. I myself am a fellow junkie, you guys. Today, I'm talking about a high conviction stock, you guys. I've done extensive research in this company. I feel it has substantial upside, you guys. And I myself am going to be pledging a large allocation of my portfolio into this company, you guys. I don't blindly tell you to invest into anything that I haven't done so myself. I have skin in the game, you guys. I stand by my picks. Before I jump into the company, you guys, I'm going to take a quick moment, you guys. I put a lot of effort into making these videos. I appreciate all the support and love, you guys. I would love you back as well. Take a moment, show me some love, subscribe to the channel, hit the like button, you guys. Today we're talking about an Australian oil and exploration company founded since 1996, 88 Energy, with a market cap of approximately $365 million. 88 Energy is listed on 4 exchanges, you guys. It's listed on the Aussie exchange, ticker symbol 88E. It's listed on the London exchange, 88E, on the German exchange, ticker symbol POQ, and for us US investors, it's listed on the OTC markets, ticker symbol EEENF. While in the process of my due diligence into 88 Energy, I truly jumped down a rabbit hole, and I put in extensive research into this company. While in the process of researching, I came across a competing company by the name of Pantheon Resources. Pantheon, similar to 88 Energy, is focused on exploration of the North Slope of Alaska. They're undervalued with substantial contingent resources on their land leases. I found that this company, Pantheon, is very similar to 88 Energy. Now, while this video is particularly going to focus on 88 Energy, by the conclusion of me making this video, I made a determination that I want to diversify my risk in the North Slope of Alaska, and I've decided to invest in both Pantheon and 88 Energy. Both 88 and Pantheon are similar phases of their exploration. They're both undervalued, sitting on billions of barrels of contingent resources, and they both have substantial upside. While the due diligence in this video is particularly focused on 88 Energy, I will touch on Pantheon quite frequently, and at this point, I feel like both 88 Energy and Pantheon are complementary to each other in my views. 88 Energy is focused on exploration of the North Slope of Alaska, particularly the Nanushuk and the Turok formations. This is particularly an attractive region for exploration because it has plausible routes of exportation. Once oil is found, this area is accessible to the transatlantic pipeline as well as other roadways and highways in which oil can be exported. The Nanushuk formations have a prolific history of substantial oil finds dating back to the 1960s. Here you see some video footage produced by 88 Energy highlighting some historic oil finds dating back to the 60s. The capital-intensive nature of exploration in Alaska created a high barrier to entry, only accessible to the bigger players, which was basically BP and ConocoPhillips back in the 60s. However, dramatic progress in seismic imaging technologies and fracking technologies have made it plausible for the smaller players to enter this arena. The improved technologies have provided better imaging quality to greater depths being surveyed, which has dramatically improved the possibility of profitability. Recent discoveries have found that previous sites of oil exploration by the same ConocoPhillips and BP have left behind untapped oil reserves at greater depths right above where they had previously drilled. Previously, we didn't have the technologies to map out these greater depths, to verify the existence of oil, to justify the costly nature to drill at further depths. 88 Energy has over 250,000 acres of land on the North Slope for potential oil exploration, with 3.4 billion contingent barrels of oil. They have 4 ongoing projects: Project Peregrine, Project Yukon, Project Icewine, and the Umiat oil fields. 2 of these 4 projects have already been drilled. The first site which was drilled was Project Icewine. Let's take a look at a map. Here's a map of the total lease holdings by 88 Energy, and at the bottom you'll see the total acreage that each project contains. Icewine, located in red on the bottom center, is comprised of 3 wells: Icewine 1 and 2 on the HRZ shale formations, and Charlie 1 is located on the CB and the Turok formations. Charlie 1 uncovered a large accumulation of oil in CB and a large accumulation of condensate in Turok. Furthermore, Icewine 1 and 2 wells have a close proximity to Talitha. Talitha is owned and operated by Pantheon Resources and has most recently uncovered over 1 billion barrels contingent resources. And Icewine 1 and 2 proximity to Talitha further bolsters the probability of oil located on Icewine. Icewine has contingent resources of 1.77 billion barrels. The next site drilled by 88 Energy is in green, Project Peregrine. Peregrine consists of 195,000 acres, acquired by XCD Energy, and they verified 1.6 billion contingent resources by the Merlin 1 well drilled earlier this year in 2021. Finally, the other two projects remaining are Project Yukon and the Umiat fields. Both Yukon and the Umiat fields are both historical wells drilled in years in the past. Yukon had 3D seismic imaging conducted in 2018 and has believed to have an additional 90 million barrels of oil. The Umiat is a historical oil site from the 1940s with over 60 wells drilled from the 40s, and that site has yet to be assessed by 88. Alaskan oil exploration has always been the subject of environmental conservation. While the Trump administration had given the green light for a lot of Alaskan oil exploration, the Biden administration has halted a lot of the exploration.
7.6 million hectare reserve is home to many endangered species and is the birthing ground for the porcupine caribou, which are a major food source for the Gwich'in Nation. Last year, the Trump administration announced it would auction off 600,000 hectares to oil and gas exploration.
Now, the concern of environmental conservationists is the ANWR region, the Alaska Arctic National Wildlife Refuge. However, 88 leaseholds are located in the NPRA region and not in the region in which the environmental conservationists are concerned about. That's not to say that the NPRA region has not been the subject of environmental conservation whatsoever. Currently, ConocoPhillips' ownership of the Willow Project has been stalled. They've been the subject of a lawsuit by the Bureau of Land Management and Coalition of National Conservation Groups. A Ninth Circuit judge has stalled their project.
Before I conclude my Alaska comments, I'll move west to the National Petroleum Reserve to discuss Willow, which we believe could be the next great Alaska hub. Dominique showed you a planned sensitivity for Willow, and I'll provide a project update. We've now completed our appraisal work of Willow with a 12-well program that de-risks the resource. We've incorporated the appraisal information into our front-end engineering and design, also known as FEED, a process that optimizes the plan of development for this new world-class opportunity. Slide 25 describes our planned field development, our project timeline, and provides the capital and production impacts for this project. We've had several years to consider and evaluate various plans of development using our optimization models. We have concluded that the highest economic value will be achieved using a modularized central processing facility with a capacity of 180,000 barrels of oil per day and 250 million cubic feet per day of gas handling. Field development will require approximately 200 wells, which will be drilled from only three drill sites, thus greatly minimizing our footprint and enabling us to capture efficiencies. On our current timeline, first oil occurs about 6 years after we take our final investment decision, or FID. And we're on a path to have FID completed by year end if the litigation uncertainties are resolved. At 100% working interest, we estimate the project requires approximately $6 billion of capital to first production, including pre-drilling development wells. The estimate for the total plan of development is approximately $8 billion to develop the recoverable resource, which is estimated at 600 million BOEs. Now, Willow is very competitive on a cost of supply basis in the mid-30s per barrel, and we have identified up to 3 billion BOEs of nearby prospects and leads with similar characteristics that could leverage the Willow infrastructure.
Did you guys pick up on that? He just stated they've identified 3 billion barrels of oil in neighboring exploration sites. That means what he's stating is 88 Energy and all these other small exploration companies are potential acquisition targets for the big papa, ConocoPhillips.
This offers significant long-term upside to this project. To conclude, we have every reason to believe that Willow should and will be developed. However, we've been clear that we won't take the final investment decision until the legal risks are resolved.
Conoco is making the argument that the Willow project in the North Slope is definitely a worthy financial undertaking. However, they will only move forward with the project once their litigation with the national conservation issues are resolved. However, despite the conservation issues, they're stating that no doubt the North Slope of Alaska is a financially worthy undertaking. Now, how does all this talk about impending litigation for ConocoPhillips in the North Slope of Alaska reassure an 88 Energy investor? Well, rest assured, most recently, 88 Energy has adopted ESG standards. ESG stands for Environmental Social Governance, and it demonstrates their dedication for environmental conservation in the North Slope of Alaska. If you click on their website, there's a tab right at the top dedicated to ESG, and you could browse through their GSG commitment. These ESG standards will greatly decrease the likelihood of 88 Energy ever being the subject of a lawsuit or any kind of controversy for environmental conservation. Now here's an article from June 30th in which it states that 88 Energy adopts a global standard for ESG reporting. 88 is adopting environmental, social, and governance ESG framework developed by the World Economic Forum. This framework is regarded as a global standard for ESG reporting and encompasses 21 core metrics and disclosures. Page 2 of this notice goes over the 21 core indicators. Now at this point in the video, I'm going to chronicle the most recent sequence of events that's transpiring with 88. I'm also going to discuss the share issuances coinciding with these recent events. I'm not going to sugarcoat it, you guys. There's been a lot of share dilution. There's been a lot of stock issuances from 88. Now you're talking about a smaller, not so well capitalized company operating in a capital intensive industry. Now the balance sheet of 88 has improved tremendously, and I'm going to touch on that in just a moment. They're actually well positioned in terms of capital, but in the past there has been a lot of share dilution. I will document it in this chart. I'll go over it with you in detail, you guys. I can't say 100% outright that there'll never be any further share dilution. There is still a great likelihood. However, in my humble opinion, the upside far exceeds the downside of potential further dilution. They're well positioned to be an acquisition target. They've appraised a couple wells. Further, their balance sheet looks better than ever before. They're flush with cash, which I'll touch on in the most recent developments. But by no means is 100% outright there's no chance of any further dilution. There is further exploration required, and there is a cost to do so. So starting in early 2020, the company had raised approximately 5 million Australian dollars. This is just a straight capital raise to fund their exploration. Fun fact, when converting Aussie dollars to US dollars, the conversion factor is 88. This happens to be a coincidence that we're talking about 88 Energy, and the conversion ratio from US dollars to Aussie dollars is 0.88. In the summer of 2020, 88 had merged with a company called XCD. They had acquired interest of their Peregrine projects. Peregrine in green, once again, was originally owned by XCD Energy. XCD Energy shareholders were offered 2.4 shares of 88 Energy for every XCD share they had held. XCD shareholders were offered a substantial premium for their share price at the time of the merger. In summer of 2020, the company had issued more shares when they merged at the time with XCD. The company was trading sub-pennies at this point following the earlier share dilution earlier that year. The big instance of dilution in late 2020 when the company had issued 1.6 billion shares in excess of to raise somewhere in the ballpark of 10 million Aussie dollars, 8.8 million US dollars. That was probably the single largest, well, not the largest, one of the largest issuances of dilution. Row 8 is another large issuance of dilution. So in terms of straight capital raises, there's a lot of issuances of straight capital raises. Additionally, there's also issuances to vendors in lieu of cash. See in row 7 and row 10. In row 11, you'll see issuances of stock to vendors in lieu of cash. I think it's very promising to see this in the company, where vendors are willing to accept issuances of shares in lieu of cash for their services. As I previously mentioned, 88 is a small operator. They are cash strapped. They are dependent on farm out partnership agreements with vendors to fund their operations. I think it's very bullish to me when a vendor knows that there's oil in the ground and they're willing to take a bet. In lieu of taking hard cash today, they're willing to hold shares of 88 long term, and they've accepted shares in lieu of cash. I think this is very bullish. Here's a cleansing notice from May. One instance in which a contractor, a vendor, working with 88 Energy, was willing to accept share issuances in lieu of cash for services provided to 88 Energy. Once again, I think it's very promising that contractors working with 88 see the probability of oil in the ground, and they're willing to bet long-term in the share price as opposed to accept hard cash today. In January of 2021, 88 had acquired the Umiat oil fields. They had acquired these fields from Emerald House LLC. They entered into a sales and purchase agreement in which they would acquire the Umiat oil fields. The consideration of the purchase was 4% royalty, and also, instead of straight cash, their payment would be in the form of an assumption of liability for the abandonment of Umiat 18 and Umiat 23 wells drilled back in 2014. The estimated cost to abandon these two wells is approximately $1 million. So now I'm going to touch on the buyout of APDC in the Peregrine project. 88 had initially partnered with the company abbreviated APDC to fund the financial requirements in drilling Merlin 1 Peregrine. Here's a press conference release in which it states that while APDC is encouraged by the initial results from Merlin 1, which I'll discuss the results in a moment, I'm just going to touch on the financials right now. It is unlikely to be able to satisfy the anticipating funding requirements for operations in the future seasons, and APDC does not want to hold 88 Energy back from further developments of the acreage. APDC does not have the technical acumen nor the operational expertise to add value in a remote region of Alaska. It says here, APDC will have contributed about $20 million towards the project to date, and they will remain liable for any outstanding cash calls in the future. In terms of the consideration for the buyout, they're being compensated with $14 million payable in 88 Energy regular shares issued over several tranches, subject to final reconciliation mechanism. I will touch on the final reconciliation mechanism in just a moment. Additionally, they're subject to receive royalties of 1.5% overriding royalty of all interest in the future Project Peregrine licensing, and a $10 million cash bonus upon 100 million barrels within 36 months, an additional $2.5 million cash for 50 million barrels on the achievement of gross 2P reserves added over 100 million barrels. I'm not going to read all of this. They're basically receiving issuances of shares. They have a 1.5 overriding royalty. Additionally, they're going to be receiving cash bonuses upon certain achievements. So that's the consideration for APDC buyout. Now to provide an explanation of what the final reconciliation mechanism is. Basically, 88 had pledged to issue APDC $14 million in shares. These are to be issued in several tranches, and they were subject to the open market price. They were issuing shares at whatever price point the shares were trading at that date. In the face of a rising share price, the brilliant executives decided to go ahead and expedite the stock issuances, and they went ahead and did so in the face of a rising share price. By the conclusion of the issuances, they had issued less shares than first anticipated because the stock price was increasing. Based on my chart, I was tracking the issuances as they were ongoing throughout the course of this summer. I projected they would have issued 824 million shares. Anything in green on my chart relates to an APDC stock issuance. Here's a notice from July 15th, just a few weeks ago. It states here that 88 had concluded the share issuance to APDC. It says here, for the acquisition for 50% working interest in Project Peregrine, the final number of the share issuance to APDC was 633.5 million shares, which was 190 million shares lower than originally expected. The reason for the lower final price was the shares were issued in several tranches and were subject to a final reconciliation mechanism. To date, no further shares are to be issued under the agreement, and APDC has now received a full upfront consideration for 50% working interest in Peregrine. 88 now holds 100% working interest in Peregrine, And it goes on to show the final outstanding share count, which is 13.5 billion shares, which reconciles with my chart as well. Now to touch on one final financial development. In July of 2021, the company had sold its Alaskan oil and tax credits to another energy producer in Alaska. They had received $18.7 million in sale proceeds from the sale of this transaction, of which $16.1 million was applied towards paying off debt. The company is now entirely debt-free, with cash reserves of 14.8 million Aussie dollars. The overall tax credit was worth $19.1 million, which they had sold for $18.7 million. They did forfeit $400,000 in tax credits, but the upside is that they are saving $1 million in finance costs. It states here, this transaction, which accelerates the realization of value of the Alaskan oil and tax credits and an early repayment of outstanding debt. As a result of this transaction, the company is now debt-free with a reduced annual overhead. Listen to this, guys. Reduced annual overhead of US $1 million in associated finance costs. So they forfeited $400,000 in tax credits to save $1 million US annually in finance costs. I tell you, the executives for this company are brilliant. Let's start by sinking our teeth into Icewine. Icewine is located in the middle center portion of the map there. Icewine is de-risked by 3 wells. Charlie 1 in the west and Icewine 1 and 2 in the east, you guys. West is in orange there in the bottom portion, central is in red, and east is in blue. And then you see in the bottom portion of the map, you see the total acreage occupied by each central, eastern, western, and central block of Icewine. Icewine 1 was drilled in Q1 2021. I'll jump into those numbers in just a moment. I also should mention that Icewine is ideally located near the transatlantic pipeline for oil exportation. Let's jump into this PowerPoint presentation, you guys. Now here you are, the eastern, western, and central blocks. And the following slide is all the different prospects on the far left side. Let me zoom in on these numbers for you guys. I'm not going to list every number for you guys. You guys could pause the video and take your time and review these numbers. But these are the different prospects. And the next line category is the different horizons. And then you have the lowest, best, high, mean, gross, and net projections. For every potential prospect within Icewine, you guys. Now here's an image of what the horizons look like. Let me zoom out here. Here's an image of Charlie 1, and then on the far right you see Schrader Bluff and CB and Turok formations, and what these different horizons look like. The Indigo, Lima, upper lower Lima, upper and lower middle stellar horizons, you guys. These are basically stacked targets on top of each other of different horizons, you guys, and these are different expectations within each horizon at different projects, at different potential leads. Now let's check out this press release from April 2020 following Charlie's Q1 2020 drilling exploration of Charlie 1. Let me highlight for you. 88 Energy confirms that Charlie 1 appraisal well has proved the presence of mobile hydrocarbons in the form of condensate gas in the Turok formations in both the middle and lower stellar targets. Hydrocarbons were successfully recovered to the surface from both targets using state-of-the-art downhole sampling tools called Aura. Further analysis to confirm the composition of gas to liquid ratio will now be undertaken. Now let's also talk, that's the Turok formation, first paragraph. Second paragraph is CB. Now CB, I'm going to focus on this portion of the paragraph. Excellent vertical seismic profile data was obtained in the well, which will now be used in conjunction with other log data and existing 3D seismic to remap these targets. Sidewall core analysis will assist with determining where improved reservoir is likely to exist. Mud gas observed while drilling in the CB indicated that hydrocarbons at this horizon are heavier than those in the Turok. And this portion is important, pay attention. And this is the horizon where live oil was observed across the shakers in the nearby Malgook well. Now that's the update on Charlie 1 in regards to the Turok, and more importantly in regards to the CB formations, you guys. Let's check out this video interview from David Wald, the former CEO, following the video was filmed in 2020 following the Charlie 1 well.
Project Icewine briefly. We drilled a well earlier this year. and we made a large oil discovery in the CB and also a condensate discovery in the primary target, which was the Torrex. So the CB was the secondary target. We did some analysis of the results of the well, and we came out with an independent resource assessment recently that showed there's over 1.4 billion barrels recoverable in the CB, and that's oil, not condensate.
So now you guys heard it from David Wald, the former CEO, discussing Charlie 1 drilling. He stated that the Turok Formation found a lot of condensate. The CB Formation saw oil accumulations, and they're expecting 1.4 billion barrels recoverable in the CB Formation. Let's reiterate the press release from April 7th. Mud gas observed while drilling in the CB indicated that hydrocarbons at this horizon are heavier than those in Turok, and this is a horizon where live oil was observed across the shakers in the nearby Malguk well, you guys. This is promising. I'm going to conclude our discussion of Icewine by discussing Pantheon. Pantheon is located in close proximity to Icewine 1 and 2. Pantheon owns the Talitha A well. As you can see by the map, Icewine 1 and 2 is located in close proximity to Pantheon. Pantheon is estimated to have 1.4 billion contingent resources. Now, as a reminder of what contingent resources are, Pantheon is estimating 1.4 billion contingent resources at Talitha. Contingent resources are those quantities of petroleum which are estimated on a given date to be potentially recoverable from known accumulations, but which are not currently considered to be commercially recoverable. Take a look at this little chart here. The middle category is contingent resources, you guys. These are discovered but not commercially viable as of today's date, but anticipated to be commercially viable at a future date.
We announced that in our basin floor fan complex, we have 12.1 billion barrels of oil in place and 1.4 billion barrels recoverable. We believe that those can be classified as contingent resource.
You're listening to you talk recently about the North Slope oil fields. How does this compare? How does the basin floor compare to the other fields you have?
Well, it dwarfs everything else that we have, Tim. And by comparison to other fields on the North Slope of Alaska, the original oil in place estimate for Prudhoe Bay back in the late 60s was 10 billion barrels of oil in place, 3 billion barrels recoverable, and now it is going to recover more than 15 billion barrels, or more than the original oil in place estimate. I think that our Theta West project has the potential to grow, maybe not quite as much as Prudhoe Bay did, which is more than 5 times on recovery, but certainly it has the potential to grow given the inputs we use, which were reasonably conservative.
Well, I'm a layman at this game, but to my ears, this sounds like an enormous discovery. If it is enormous, I've got to ask you this question. Your share price has come off this week. I mean, what's been driving the share price down when you've got a discovery this size?
Tim, I have no idea. I can't correlate what we have done with what the stock market has done, and it's the stock market. If people generally think that this is a sell, somebody else will buy. It's a good buy for those who understand it. We're going to go on a U.S. roadshow in June, and our announcement of 1.4 billion barrels in place puts our market cap at just really pennies on the barrel in the ground, really.
Pennies on the barrel in the ground. There you have
Jay
it,
said,
guys.
Theta West is 1.4 billion barrel, we believe, contingent resource. Man, that's world class. Anywhere in the world, offshore, onshore, deep water, wherever you want to here.
I mean, sitting where you are now, you look a very attractive proposition for a farm out deal. Has the company had any approaches, any interest? Well,
First of all, this year is completely different than last year. Remember, there was a thing called COVID. A year ago, the price of oil dropped to minus. People were selling. Having people to pay people to take their oil. Today, the price of oil on the North Slope is $68, $70 a barrel. It's not COVID. We have drilled the well. We have found the hydrocarbons. And we still have 100% of the project. A company the size of Pantheon at this point in time in the life cycle of a project would be lucky to be sitting on 20% of all this. So we're going to be attractive to a lot of people.
And just give me a quick overview of the balance sheet. Any debt on the balance sheet, Bob?
None.
Debt-free?
Debt-free.
Okay. One more question, Bob, before I go back to Jay. You've told us a little bit about the drilling program. What other news can we expect coming out of Pantheon in the next few months?
We've got multiple targets that we have to analyze, and we have to reanalyze all the data for the shelf margin deltaic. Each one of these is we expect a resource upgrade on. So that will be coming out over the next several months.
So Jay, let me come back to you. As we've heard, the company is sitting on billions of barrels of oil. You've got no debt on the balance sheet. Other than the share price, you're in a very strong position. You should be sleeping like a baby. But come on, tell me, what is it that keeps you awake at night?
Obviously, Tim, I think we're a takeover target. It appears that the market really doesn't understand how to value the assets we have. Industry does. And at a $270 million valuation, it's a gift.
Thanks, Jay. Thanks, Bob. You heard it here. Pantheon, it's a gift. That was Jay Cheetham and Bob Rosenthal of Pantheon Resources, listed on the AIM market in London, updating us on this week's news.
Well, we're not funded for those, so we've got to find a partner or raise the funding somehow. So that's a challenge for us. But I think given where we are and what we have, it's not a huge challenge.
Excellent. So that's the plan then, to find a partner, is it, Jay?
Find a partner or fund it some other way, Katie, yes.
Excellent. And what else would you like your investors to know this afternoon here?
Well, I think we're terribly undervalued. People in the stock market like to do comparisons. By comparison, Oil Search, which is about 20 miles to the west, paid about $3 a barrel of oil in the ground. We just announced that we have 1.4 billion barrels recoverable oil in the ground from just one of our projects. And if you do the math, that turns out to be about 20 cents a barrel per our share, based on our share price. So I think that there's a great disconnect between how the market is valuing Pantheon and how industry could potentially value Pantheon.
Now take notice of the foregoing video clip in which we discussed about 88 Energy and Pantheon similarly situated at a small operator in the North Slope of Alaska being dwarfed by a bigger company such as ConocoPhillips, company that's small operator with low cash flow, that's desperate for cash flow, that really pretty much is pretty much soliciting a buyout and has no debt. This company is well situated for a buyout. Both Pantheon and 88 are acquisition targets in my book.
Sitting where you are now, you look a very attractive proposition for a farm out deal. Has the company had any approaches, any interest?
Today, the price of oil on the North Slope is, $68, $70 a barrel. It's not COVID. We have drilled the well. We have found the hydrocarbons, and we still have 100% of the project. A company the size of Pantheon at this point in time in the life cycle of a project would be lucky to be sitting on 20% of all this. So we're going to be attractive to a lot of people.
And just give me a quick overview of the balance sheet. Any debt on the balance sheet, Bob?
None.
Debt-free?
Debt-free.
So Jay, let me come back to you. As we've heard, the company is sitting on billions of barrels of oil. You've got no debt on the balance sheet. Other than the share price, you're in a very strong position. You should be sleeping like a baby. But come on, tell me, what is it that keeps you awake at night?
Obviously, Tim, I think we're a takeover target. It appears that the market really doesn't understand how to value the assets we have. Industry does. and at a $270 million valuation, it's a gift.
Thanks, Jay. Thanks, Bob. You heard it here. Pantheon, it's a gift. That was Jay Cheatham and Bob Rosenthal of Pantheon Resources, listed on the AIM market in London.
Now, as a final reiteration of Pantheon, here's their recent press release from July 11th, 2021. Management believes they have validated its earlier assertion of over 1 billion barrels of recoverable oil potential from this multi-billion barrel oil in place play at Talitha. Pantheon is extremely encouraged by the analysis of shallower zones in Talitha. The reservoir qualities are in line with expectations. Oil appears to be lighter than expected, and is an additional significant zone has been discovered, increasing the total resource potential significantly. These are independent of Kuparuk and will be tested next winter. An enormous volume of high-quality data has been collected from drilling Talitha, which has both de-risked the zones for future drilling and increased the confidence in their viability. Now here's an update from 88 Energy where they make reference to Pantheon. 88 has been closely monitoring the activity at the nearby northern border of its Project Icewine acreage, where a low flow of oil from the Kuparuk has been reported from the Talitha A well by Pantheon Resources. The results at Talitha A are highly encouraging regionally for Kuparuk, including across Project Icewine. 88 Energy internal geoscience team is looking to reassess the potential acreage across. And additionally, if you take a look at this graphic above, this yellow line provides an excellent pictorial of the potential route for the transatlantic pipeline. This shows you the transatlantic pipeline route that's accessible to both Project Peregrine and Project Icewine, in which 88 is optimally located. Next, we're going to take a look at Peregrine. Peregrine is in the bottom left portion of your screen in green. Peregrine is located just south of Willow, which is owned and operated by ConocoPhillips. Peregrine is in close proximity to be a potential acquisition target for ConocoPhillips and their Willow projects. If we take a look over here, the next slide here discusses Peregrine. Just disregard what you see in the upper left corner. It states that 88 Energy is an operator and has working interest of 50% of Peregrine. That is outdated information. 88 had bought out their partner, APDC. APDC was a former partner at Peregrine who owned 50% working interest. They've bought them out. 88 is now owner of 100% interest of Peregrine. Peregrine is a total of 195,000 acres, consisting of 3 wells: Merlin, Harrier, and Harrier Deep. Merlin 1 was drilled in March of 2021, and I'll get to those results in just a moment. In the bottom right corner of your screen, you'll actually see a chart with the prospective resources. Actually, I have a better chart to share with you. I like this chart better because it has the COS in the far right corner. This is the chance of success. So you have Merlin, Harrier, and Harrier Deep located in the Nanishuk and the Turok formations. And what you have here is a prospective oil resources, lowest, best, highest, mean, and your chance of success. Peregrine is located just south of ConocoPhillips Willow and Harpoon drilling programs, which estimate 750 to 800 million recoverable barrels of oil. Next, let's take a look at the most recent drilling results at Merlin. So this press release is dated June of 2021. Small trims were cut from the side of several of the 48 sidewall cores to undergo special analysis. Oil signatures may be inferred by the presence of heavier carbon compounds seen in 2 of the 5 samples run to date. This is highly encouraging. Test results to date serve to refine the company's understanding of both the quantity and the mobility of hydrocarbons in place, as well as the commercial potential of the greater Peregrine acreage, which will be further appraised in the coming weeks. The company looks forward to further results from the remaining 13 trims over the coming weeks. Phase 2 of geochemical analysis program on the sidewall trims will commence after the completion of analysis of the remaining 13 trims. The company is highly encouraged by the preliminary results received to date from the Merlin 1 testing program, you guys. Now here you are is a little flow chart of what's been accomplished to date by Merlin. It's really easy to follow. All 3 depths showed evidence of up to 65% hydrocarbon saturation. Isotopes indicating thermogenetic oil source. Let me zoom in. Thermogenetic oil source samples tested as water, most prospective zones not sampled. Now I'll talk about the most prospective zones not sampled in just a moment. Additional core fluorescence noted in the lab photo cuts observed across multiple trims. 2/5 of the initial screening samples returned evidence of hydrocarbons. Once again, to reiterate here, as I highlighted, 88 Energy has acquired 100% working interest in Peregrine post-completion of the acquisition of APDC's 50% interest in the project. Alright, you guys, just to keep it 100% transparent with you guys, no discussion of the Merlin 1 well at Peregrine is complete without this being truthful and discussing this huge gap down we had in early April. So you could see the charts that from early to mid-March to early April, we had a lot of FOMO running into the company. The stock price had rapidly risen, and that's because a lot of investors were anticipating the results from Merlin. And what followed was a very poorly phrased press conference. That's all it was. There was no really negative results. It was just a really poorly phrased press release. So on April 5th, we closed at 8 cents. And the following day, on April 6th, we gapped down to 2 cents. It's a huge gap down. It was definitely an over-exaggeration. And at these lowest levels on that day, you came down to 1 cent. A bunch of my buddies were buying shares at that price. Anybody that bought shares on this huge gap down, they had an amazing cost basis, without a doubt. What took place, you guys? I highlighted this sentence here to basically summarize what took place. Significantly, these depths were among the most prospective zones that we were not able to be tested with RTD downhole fluid extraction tools. To reiterate, the prospective zones were not able to be tested. So what took place is, we're talking about March, early April, the permafrost was melting and their drill bits were getting stuck. They were able to retrieve results, they were able to retrieve samples. However, the samples they retrieved were not from the most prospective zones they were initially targeting. As it turns out, as months went by and they were getting back results from the side core sampling, the results were actually favorable and encouraging results. So the sell-off was over-exaggerated, in fact, you guys. And the press release did not say that anything was less favorable, that there's less oil in the ground, less oil than first anticipated. None of that was said. Simply, the press conference was really poorly phrased, and there was a lot of FOMO into the company. They were really anticipating some great news, and they didn't get the results they wanted to, you guys. That's what had taken place. It was really an over-exaggerated sell-off. Now, following that sell-off, we've been channeling between 2 and 3 cents for several months, you guys. And as you can see in the far right side of the screen, we're in this channel here, and we've peaked above this channel, we broke down below the channel, and now we've broke above and maintained above the channel, you guys. And we've also developed this trend line support. So it looks like we're ready to run coming into the fall, you guys. Both 88 and Pantheon are smaller players in the North Slope of Alaska. They are contingent on farming out partnerships to conduct their oil exploration and oil extraction activities. Their smaller scale makes them an ideal target by the bigger players for more consolidation in the North Slope of Alaska. Here's an article, Large-Scale Fracking Comes to the Arctic in the New Alaska Boom. This article is from 2017, however, the information here is still accurate to this date. It says Arctic lands and waters hold a resistible allure for global oil companies. Fracking comes to the Arctic. Over the past year, oil companies have discovered volumes of Alaskan North Slope totaling as much as 5 billion barrels or more of recoverable oil. This is a 14% increase in the U.S. proven reserves based on recent estimates, which is no small thing. I believe that this 5 billion barrel has been considerably upgraded over the past couple years, and there's several players that easily can be consolidated in the North Slope of Alaska. Peregrine's close proximity to Conoco's owned Willow projects, and also IceOne's proximity to Pantheon's owned Talitha projects, set up an excellent scenario for consolidation. I anticipate a lot of M&A activity. Now let me just preface this discussion with the following disclosure. I am not a geologist, nor am I a petroleum expert. I'm not a petroleum geologist, nor do I play one on television, you guys. I am simply gathering due diligence from Pantheon and 88 Energy's press releases, SEC filings. I'm also active on this subreddit EEENF investor community, and there are indeed actual petroleum geologists on the site. I will link their post. Let's start a discussion on Reddit subreddit group EEENF. there's a lot of really smart investors participating, active participants in this group, you guys. Some of the people in this group are actual geologists and petroleum geologist experts, you guys. So I hold this investor community with high regard, and some of the individuals discussing on this forum are highly intelligent. I am not the author of this content, you guys. I am simply collecting it and regurgitating it to you guys. So this post is about this slide from the most recent investor presentation, you guys. He's basically pointing out this 3.4 billion barrel resource is misleading. This is an unrisked resource. So what are unrisked resources? Unrisked resources are those which have already been developed by drilling and production and thus have a reasonable certainty of being produced. So basically, he's stating that these are risked resources. They are not unrisked resources. So that's a little bit misleading. They should have included the word risked in their presentation slide. Now here it states here's another post about unrisked resources. Unrisked net mean prospective resources versus expected outcome. Not even 88 claims the geological chance of success, the COS, which you'll see referenced frequently as a chance of success, is 100%. Each time the 3.4 billion barrels figure rears its head, another wave of investors get unrealistic expectations. I do believe in the new management is less hype-driven than its forebearers, and so choose to analyze the portfolio by using their own numbers. If anybody has better info about the company, they should bring it forward. This does not mean that 88 is a good investment. It just means that it may not be worth $1 per share. Now back to this discussion about risk assets. This post, entitled By Aggressive Net, Resource Estimate for 88E, the danger of just cutting and pasting the press release. So he's still talking about risk resources, you guys. I highlighted this portion, which I found to be the most potent info here. Furthermore, in their historical press release, they included geological chance of success, so the users can calculate risked resources and the expected outcome. This is important because if they have 6 independent prospects that add up to 3.4 billion barrels of unrisked net mean prospective resources, each with a 25% chance of success, the chances of all 3.4 billion barrels being found is less than 25% to the 6th power, which is 2.5%, which is 1 in 4,000. The chances of finding nothing is 75% to the 6th power, which is nearly 18%, 1 in 6 chance. Personally, I like the risk reward here because 80% chance of finding something that would actually be 3 to 5 times the stock is pretty compelling. For those who think you have 3.4 billion barrels in the bag, please understand the company you're investing in says it owns, rather than someone who does not know how to interpret the oil risk and uncertainty when they repeat information without context. So a figure they heard someone credible. I'm sorry, I don't understand the last part. But basically, what he's stating here, you guys, is that this is still a good investment. He sees a potential 3 to 5x upside, you guys, from the current share price. The company is definitely undervalued. However, he's stating that the probability of finding the entirety of the 3.4 billion barrels of resources, which is put out in the press release, is highly, highly, highly unlikely, you guys. He's stating that there is a great upside to this stock, but you need to have a realistic price expectation, you guys. It's not going to $10. It's not going to $6, you guys. Now I'm going to jump back to the slide from the investor presentation just to clarify things a bit further. The 3.4 billion barrels are prospective resources which have not been risked. However, 9.94 million barrels of oil are 2P reserves. What are 2P reserves? When we're discussing the 2P reserves, we're talking about the Umiat. Let's jump over to this slide here. By user GeoDust. Now this individual is an actual geologist, is a petroleum geologist. This individual understands what he's talking about in this subject. Now, what are 2P reserves? The term 1P is frequently used to denote proved reserves. 2P is the sum of proved and probable reserves. 3P is the sum of proved, probable, and possible. The best estimate of recovery from committed projects is generally considered to be to be 2P sum of proved and probable reserves. There are 3 main categories under the Society of Petroleum Engineers defined to be proved and probable. For an oil and gas deposit to be classified as reserves, you first need to establish technical and commercial certainty of extraction by using existing technology. Once this has been established, the degree of this certainty is then decided by breaking reserves down into 3 distinct categories. Proved reserves are 90% certainty of commercial extractions, probable is 50%, and possible reserves is a 10% probability of extraction. Now, if we take a look at this chart right here, we know that the 3.4 billion barrels are prospective resources, so they fall into this bottom category. However, we also know that 94 million barrels fall under the category of 2P reserves. So they fall under this category here of probable, proved and probable. So proved plus probable reserves is this middle top category here. Lastly, we're going to speculate about the eventual share price, the fundamental value of this company based upon different oil finds. Now, I really am not equipped with the knowledge how to really appraise these wells and come up with the eventual share price valuation. This is just not my expertise. I'm simply regurgitating information, you guys. The current price of crude today is $69.25 per barrel. Let's start with that understanding. Now here's a post from Carlos Vegan on subreddit stating, his post is entitled Double Valuation Based on EEENF Net Mean and Best Resources. So he came out with the net mean, he came out with different valuations based on net mean and a best scenario. Now he's valuating the end result at $3.50 per barrel as their margin price, you guys. This is a very conservative valuation since we know that the price per barrel of crude is nearly $70 a barrel. This is their margin. We're assuming a margin of $3.50 net for 88 Energy. So this is a very conservative valuation, you guys. And here is our gross recoverable estimates. Here's the interest in which we own in these projects. And here at the bottom, I'm not going to go through every category in detail. I'm just going to go straight to the bottom, but you're welcome to look at it more closely. Let me zoom in for you. Here in the bottom, it says the eventual share price. So the net mean, the best valuation is $59 59 cents per share price. It's a 418% upside based on whenever he created this slide presentation. That's the best scenario. Now a net mean valuation is, he comes up with, once again he's using $3.50 per barrel, but now the reserves, the finds are significantly more. The gross recoverable estimates are far higher, and this is a net mean valuation. And he's basing the upside to be 684% and an eventual share price of 95 cents per share, you guys. Now, I have no way to state that this is accurate or not accurate or completely off reservation. I have no understanding of, I have no geological background, any kind of petroleum background. I am simply accumulating a due diligence, you guys, and sharing with you. There are a lot of individuals that are very smart on this group. Please take all the information and gather your own opinion. I am not a financial advisor, you guys. So here's his conclusion. I can currently see a good chance for 400 to 600% upside within the next 2 to 3 years, which is quite attractive. The chance that all projects fail is 22% based on the chance of success estimates. The chance to double the company value from here is about 60%, since in this case it would only be required to be successful at either Merlin, Ice Wine, or Harrier plus Harrier Deep. So he's stating that in order to get a double up, you only need some of the wells to be successful, and the others could be entirely flops, and there's still a 60% chance of an upside. He's saying either Merlin or Ice Wine alone will give you a double up, or Harrier and Harrier Deep alone. Alright guys, let's take it to the charts. The charts never lie, you guys. So in terms of what's going on in the price action, you guys, following this big gap down, we entered a new channel. Now we've been trending in this channel, and the channel was from a support of 1.1 cent to a resistance of 3 cents. We've been trading in this channel for quite some time, and here we go along, moving along, and here in early July we peaked above the channel, and then we rejected and we traded right back into the channel. That was a little bit of foreshadowing of what was to come, and if you could see, we developed this trend line here. And so most recently, here we popped our head right above the channel once again, and we really started to rally. We started to see big momentum moves when we broke out of this channel of 3 cents. Now, in my opinion, any price acquisition below 3 cents was a great price entry. Now, most recently, we rallied as high as almost 4 cents most recently, you guys. And then we pulled back. Most recently, we pulled back to this trend line, you guys. Now we found trend line support at 3.1 cents, you guys. As the filming of this video, as of August 12th is the date of the filming of this video, this is a great entry opportunity. We have long-term, lots of upside, and in the short term, this is a great buying opportunity at trend line support at anywhere near 3 cents, trading today at 3.1 cents, you guys. In fact, me personally, I bought more shares. I added to my position on this stock. Like I stated, you guys, whatever stock I'm bringing to your attention, you guys, I have skin in the game, and today I bought in more shares at this trend line support, which I was expecting for the past couple of days to hit this trend line support to buy more shares, which I pulled the gun on today.
Thanks for sitting through to the end of this video. It means a lot to me that you absorbed all the content, you guys. It's really important that you conduct a thorough due diligence when you're putting your hard-earned capital at risk, you guys. Now I feel that 88 Energy has a lot of lofty price targets, you guys. A lot of people are talking about multi-dollars for the future valuation of this company, you guys. It's important to maintain realistic expectations. This company does have the potential to double up, triple up, quadruple, 5, 6x. I don't know for certain what is the eventual share price because we're speculating on how much oil is in the ground. We're speculating on the future valuations of oil. We're speculating about potential buyouts. There's a lot of speculation, you guys, to summarize. Nevertheless, this company has substantial upside and is drastically undervalued today, you guys. There's a great opportunity to jump in right now. We looked at the charts and we do see trend line support. So around the time of this filming of this video, which is mid or to early August, it's a great time to jump in. Anywhere close to 3 cents is a great entry point, as we're just sitting here at a breakout out of an earlier channel, and we're sitting at trend line support. Great entry opportunity right now. Substantial upside long term. We spoke about the fundamentals of the company. We do know that there's a high risk of further dilution. I'm not going to hide that fact. There is extensive history of dilution, and there is a probability of future dilution, you guys. Despite the dilution, I still feel that the upside is great, you guys. I feel that I spoke about Pantheon. I feel that investing in both Pantheon and 88 is a prudent decision because you're diversifying your risk. And should one of them be a takeover target and not the other, you're not missing out, you guys. Now, we also spoke about the new executive team coming on board to 88 Energy. The new executives are grizzled veterans in the oil industry, you guys. And as soon as they came on board, they made some smart plays, you guys. We also spoke about David Wall. When he left the company, he purchased a lot of shares, which is him showing that he's very bullish in the company long term. The new executives have also made some smart plays as soon as they came on board right away, such as selling the tax credits in order to pay off all their debt and being entirely debt-free with some cash reserves. Smart play. Additionally, they purchased back from 88 Energy, they purchased back from XCD Energy 50% working interest in Peregrine. I think there's substantial upside in that play. There's a lot of potential catalysts coming up on board in the near future, you guys. We just have to stay tuned for what's to come, you guys. Thanks for joining in on today's presentation, you guys. Once again, please subscribe, hit the like button, hit the bell notification, show me support. Thank you for joining me on this adventure, you guys. I'll see you on the next video.